Hello guys, there is something we want just to discuss today about double top. So I've seen a lot of questions and a lot of my students are failing this to understand the difference between a double top and double top and head and shoulder. So that's why I'm creating this video to make you understand this. So let's go straight to the charts. Let's go to the point. And if you are new here, don't forget to subscribe. So let's draw. So what's a double top? So a double top, like let's draw for example, a double top is always formed like this. This is a double top. This is a double top. Then a double bottom is always formed like this. This, this. No. Let's draw a double bottom. Double bottom is always formed like this, 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 this. So this let's draw maybe this is let's take this for example. This is a support area. These are resistance. So the market was coming from here, came outside going to bullish, going up to this point. This market touched the resistance and come back. Then then it reversed again to touch the resistance at the second time. So for you to confirm this a double this market it has formed a double top for because it has reversed from this resistance. Then a double bottom is when the market came to the support, resist from the support. Maybe for example, this market have come from here after the support. This support have turned again. The market try the buyers try to push the market again. Then up to this the sellers push. So here the buyers are stronger than the sellers. So that's why this market come here and touch this double bottom, this bottom. Then the market again reverse. This is what is called double top and double bottom. So let's for example maybe this market has formed like this. Come here, this here, this side, come again up to this point, up to this. Wow. So this market is likely formed like this. For you to, maybe let's draw this as support, these are resistance. Let's draw this, that's a resistance. So let's draw our support here. So when the market come from here, and up to our resistance, then it reverse from our resistance and come again up this side and come again to our resistance. This it has formed a double top. Come again to break our neck. So let's call this one our neck. Let's call it a neck. Our neckline. This is our neckline. That's our neckline. Maybe this was not here. This is our neckline. So when the market come here up to this point, this act as our neckline. Go again up this. So for you to confirm this market, and enter to a sell market of this market, so you need this market to break this neckline. So then when the market break this line, retest again this neckline, retest this to have this support as resistance. So this support changes as resistance. So when the market here, so for you to confirm this market has gone down. The same way as for double bottom. For example, this market is like this. Market form like this. Came here, came here, then a bit higher, then so let's draw this. So this is our support. Then this is our neckline. This is our neckline. So for you to confirm this market, we need this neckline to be swapped out. Let's draw this neckline. This is our neckline. So for you to confirm this market, you need you need you need you need this neckline to be broken, so that and retest this market to retest this neckline area. Then we confirm this market is buy. So that's why I've seen a lot of people are confusing these things, are confusing these things. So when you are confusing these things, you make it so harder for you to understand. So the only thing, the reason why I'm creating this video is just for you to understand this is the market. So for this market to act like, you cannot push the market. So for every time, that's why I'm emphasizing, for every time when you confirm a buy or a sell, so make sure you confirm at it is maybe it has formed a double bottom, then wait for a retest to break the neckline and retest at the neckline point for you to confirm this market is going higher. Again, for most cases, you find maybe, let's for example, this market is like this. Then this market come from here, touch here. So when touch here, when the market touch here, again it retraces and come. So the market goes straight to up without rotating. This in most cases is likely to be like this, but the only thing you need, just have your risk management.